Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is April 2nd, 2012 and we are currently looking at price action on our 10-minute chart. And as you can see from most of the European trading session, where you can see my cursor moving along, we were primarily bearish. There's a strong move towards the dollar during the European trading session, and this was primarily a result of receiving lower than expected manufacturing PMI numbers out of the Eurozone. And of course, this is a sign of just, economic contraction and just another signal of possible recession in the Eurozone. So, of course, this led to this risk-averse move towards the dollar. The greenback strengthened during most of the European trading session, and the pair actually fell from its session high at 33.80 down to its session low at about 32.78. It fell about 102 pips from the high and low of the day, forming the high and low of the day. And this was done as a result of just risk aversion and just the poor PMI numbers that came out of the Eurozone. But right after the New York opening bell, we began to see signs of risk appetite kick in. The pair began to rally up and recoup some of its losses from earlier. So we see this risk appetite kick in, and this could have been done as a result of good ISM numbers that came out of the U.S. We had better than expected ISM numbers that came out, and this could have led to the risk appetite in the market. So then we saw this bullish momentum and this bullish trend kick in, and it continued for most of the U.S. trading session. But as you can see, the pair found resistance at our daily pivot point at 33.37, and right now the pair seems to be well contained below this pivot point. And right now, the pair appears to want to continue its bearish momentum downward. Of course, we will have to wait to see what will happen when the Japanese market opens up. But that's the price action for today. But if you were looking for an opportunity to enter a trade during today's trading session, then you could have done it. If you were up around this time and during the European trading session, you could have entered a short order upon the pullback. Once price had hit this support around our daily pivot, you could have entered on the pullback from this support, and you could have entered a short order upon bullish confirmation, upon bearish confirmation at 33.60, and you could have closed your trade out at this daily pivot point again for about a 23 pip trade. But you could have also held out your trade. If you were a little risky, if you wanted to take more risk, you could have held out that position and closed your trade out and took your profit when price had reached our 3,300 psychological level for about a 60 pip trade. Or you could have held it out longer. You could have held it out longer until it reached this 23.6% Fibonacci retracement level at 32.81. Now, let me go to the 8-hour chart so you can see where this 23.6 Fibonacci level comes from. Now, this level right here where, of course, price found support. I know it's kind of hard to see. This is the 23.6% Fibonacci retracement level. But you can see that it was formed primarily from this rally, this major rally that began back in January at our yearly low at 26.24. All the way to resistance at 34.87. So this rally up during a few months ago is what led to this 23.6% Fibonacci retracement level. So you can see this level served as support for our pair, but it could have also been a good area where you could have exited your short position. So then let me go back to the 10-minute. So if you were in front of your chart, like if you would have entered your short order at 33.60 around this time and held out your trade until it reached this 23.6% Fibonacci retracement level, then you would have gained about 79 pips on that trade. So then that was a good trade entry, and there was multiple places you could have exited your position, but you had the potential of making 79 pips on this one entry. Now, let's say you weren't up during this time of the day, during the European trading session, and you were looking for an opportunity to actually enter the market during the U.S. trading session. Well, you could have done it. You could have entered a buy order once price had reached up and hit this resistance at our 3300 psychological level. And once the market, or once the pair began to show signs of a bearish, or I'm sorry, of a bullish movement in the pair, you could have waited for a pullback towards this support here around 32.85, and you could have entered a buy order here at this support at 32.85, and you could have gone long on a pair and took your profit once price had reached this resistance here at 33.17 for about a 32 pip trade. Or you could have held out onto your trade and closed your trade once price reached your daily pivot point level at 33.37 for about a 50 pip trade. So then, of course, these were two entries you could have entered. You could have entered here at 33.60, or you could have entered later here and during the U.S. trading session at around 32.85 or 32.87, that area. But of course, right now, like I said earlier, it appears that the pair wants to continue its bearish movement lower. So we'll see what will happen once the Japanese markets open and once the Asian session, fully kicks in. But that's it for our technical analysis review for today. And I will be talking to you guys later. You guys have a wonderful day. Get in, bye.